Premium Brands and Stampede Culinary, Synovus and Meg, possibly Netflix and Warner Brothers. These are just a few of the big name mergers and acquisitions in 2025. So what can we expect for 2026? Let's bring in Mackenzie Regent, Managing Partner of Kalos LLP and Director on the Board of Directors for the Chartered Business Valuators Institute. Thank you very much, Mackenzie, for joining us.
Thank you very much for having me. Good morning.
Before we look ahead to 2026, let's look back on 2025. And what kind of a year was it for M&As?
Well, I think there was originally a little bit of trepidation around tariffs and what that meant for market uncertainty, what to expect for the year. But really, when you look at 2025 globally, the year was a decisive rebound. Global deal value is projected to reach $4.8 trillion by the end of the year, which is really a 36% increase year over year. And really what we're kind of seeing is the idea of uncertainty is the new certainty, and deals will continue regardless of the prevailing market conditions.
So does that mean companies are adapting and realizing they have to move ahead no matter what?
Yeah, it feels that way. There's a lot of dry powder on the sidelines, and I think market participants are using, value bridges, contingent payments. No one really has a crystal ball, but I think there's an idea we can't just wait on the sidelines forever and see, and so let's get capital deployed and moving, and using structuring as a bridge to get that done.
And were there certain regions or certain areas that we saw more M&As?
Well, I think what we're really seeing in 2025 was kind of a year of the merger. There's more mega deals on record, both globally and locally in Canada, than we've seen in a long time. From a Canadian perspective, we saw 63 deals in excess of $10 billion, and it represented a 147% increase in year over year in terms of the normal deal size that we see. And so I think we're seeing strategics really lead the charge on how to bring companies together and be stronger from that perspective.
And what is some of the focus of those strategics, and what were some of the deals with Canadian companies? What's the bigger ones?
So one of the ones that we've seen recently here locally in Calgary is the Synovus and Meg deal, totaling $7.9 billion and creating one of the largest oil sands platforms. And really what you saw here was a great example of how deal tension can really return value for shareholders. And so when you look at the original Meg offer, it really kind of effectively represented a 0% premium. And then Strathcona intervention ended up driving a better premium for shareholders. You've also seen kind of a continued tailwind for cross-border transactions, notwithstanding some of the noise injected from a tariffs and trade war perspective. And so we recently actually just saw today that Premium Brands announced it has closed its acquisition of the Stampede Culinary Partners. Premium Brands is based in BC, and Stampede, notwithstanding being in Calgary, is actually based in Illinois for $688 million U.S. transaction. And we're really seeing strategic companies looking at how to diversify their supply chains and create natural hedges amongst all the uncertainty we're seeing in the markets.
And now we have to talk about AI. What kind of a factor is that when it comes to M&A?
Yeah, it's really shaping both deal flow and execution. So nearly half of all strategic tech deal value over $500 million involves some kind of AI target or AI rationale to the transaction. And over 75% of acquirers assess AI impact when they're pursuing a transaction. Then also on the professional services perspective, you really have to be thinking about how you can insert AI into your data analytics and business intelligence processes in order to drive deal insights.
And how are they bringing AI in then? And are we kind of at the max, or is there always room for more changes?
I think it's really just kind of starting to get into its infancy. There's a lot of base repeatable tasks that you can use machine learning and automation to deliver a lot of that. We've seen some of the large banks announce layoffs from a traders and other perspective. But I think at the end of the day, there's still a lot of gray area where professionals, you mentioned me being a part of the Charter Business Valuator Institute, especially amongst all the uncertainty that we're seeing right now, there's this underpinning of past doesn't necessarily equal future. And so you need professionals who can look at the data that's being aggregated by AI and machine learning to really interpret, so what does this ultimately mean, and still provide those insights to deal participants.
Still need that human perspective.
Absolutely.
Okay, Mackenzie, thank you very much for joining us today. All the best for the new year. We appreciate it.
Thank you very much for having me.
Mackenzie Regent is managing partner of Kalos LLP and director on the board of directors for the Chartered Business Valuators Institute.